This covering a lot. Ronnie Jackson, the admiral who was going to be the head of the VA, has decided to step down because of all the cane that's being raised. The president is hot, as my friend Doug Vaughn over at Channel 4 used to say. He was hot. He was hot this morning that the Democrats have been stalling all of his nominations, and then they've he was supporting Admiral Jackson. Admiral Jackson's denied all these allegations about drinking and carousing and wrecking cars, and in the end, I think he just looked at this and decided, I'm not sure I want to go through this over the next 6 months, and that's why we can't have nice things in this country, because people get chased off over things like this. So we'll talk about that. We'll get to your phone calls this hour, 314-241-9797. Let me get to my guest, and thrilled to have her on the program today. Trish Regan is with us from Fox Business News. Trish, how are you?
I'm terrific, Mark. How are you?
I am thrilled to get to talk to you this morning. I've been a big fan for a long time.
You are very kind. Likewise, I am very excited to be on the show. Thank you for having me.
Absolutely. So, I know this is a big day on the market. I checked the website earlier. There were some earnings coming out, and people are are we expecting a little bit of a rally today?
Well, it's hard to predict, right?
Yeah, no kidding.
This market. Look, the earnings have been good. They have been decent. In fact, I'd say they're better than decent. But, Wall Street sometimes gets itself all worked up over the little things, and there's certainly little bits of news that are coming out almost minute by minute that is causing investors sometimes to, I would say, Mark, overreact.
Oh, always, because it's always about expectations. I worked in the financial services industry for a while. I had a Series 7 license and all that. And I was always amazed that the market reaction was generally based on expectations alone. Not that the news wasn't good, but that it wasn't good enough.
Yeah, look, especially now, given the run-up that we've seen. I mean, we saw this just the other day, right? Caterpillar came out and had very good earnings. Yeah. And yet said that maybe this is the high water mark. The first quarter was the high water mark of the year. And what do you know? Investors panic. They say, oh, my gosh, well, what do you mean? Are things not going to be so great from here on out? So that's the kind of concern you see. But I want to give you a little bit of good news. The trade deficit, which you hear the president railing against because it's so out of whack, it actually narrowed significantly. For the first time, it dropped in the month of March for the first time in 7 months.
Wow.
So there's a lot of, that just came out this morning. There's a lot of good things, I think, for people to hang their hat on here. One of my frustrations sort of during the last decade has been that the market's gone up, up, up. Not in wild ways like we have seen most recently, but it's steadily up, despite the fact that, the economy's not been doing so great. And if you look at the Obama economy, we had 1.5% growth in jobs. In the overall economy, what they, as you well know, GDP. That is not great. Right? That's not great. You don't want that. You want to be growing in the 3% range. Now we get the 3% range, so I'm happy about that. We're starting to see a little bit of wage growth. I'm happy about that. We get tax cuts. There's a lot to be excited about in terms of fundamentals. And so I am hoping we can get off of the sugar high that the Federal Reserve gave us with low interest rates and everybody just sort of having pretend money, and get into something that's quite real, which is real growth, and we're getting there, Mark. We really are.
Trish Regan is our guest, host of Trish Intel there on the Fox Business News, and I'm thrilled to have you on here. I've always found it dangerous when presidents take too much credit for the economy or unemployment numbers or all of that. They kind of have to be cautious about that. I remember with people complaining about gas prices. So the gas prices are at the highest I can remember in the last, 2 years, 3 years? It's been a while since here in Missouri we're paying about $2.70 a gallon now for regular unleaded. Yikes. I was under the impression that we were basically independent these days when it came to oil production. What's driving this?
Yeah, no, the Saudis are still, up to their old tricks. But what else is driving this, Mark, and we should take heart in this, is that there has been an improvement in the global economy. And when there's an improvement in the global economy, there's more demand for oil.
Sure.
And more demand for oil, of course, means we're going to pay more. And so that's part of what's going on as well. So I think it's temporary. I don't think it's going to be something that's really long-lasting. It's also very it's timely in that this tends to happen around this time of year because you're heading into the summer driving season.
Yeah.
And so I think it's nothing that we can't manage. It'll be a little bit more painful, but Mark, we're getting inflation. I mean, whether it's in energy prices, food, clothes, we are starting to see bits of inflation. And as awful as that sounds, I want to tell you it's not the end of the world, and that's because we haven't had any inflation in like forever.
I know.
And it's kind of weird because how can you have a Federal Reserve that has been as aggressive as ours has been and not have inflation? And so to me, this is a little bit normal. Everybody was freaking out because the Treasury yield, what you would pay to borrow on a 10-year bond, went above 3% in yesterday's market. Well, in a normal environment, 3% is still pretty good, right? If you're going to borrow money for 10 years. It's just that we've gotten so used to record low rates. And so I bring this up only because people shouldn't fear inflation. An economy should have inflation in it. I mean, why would you go out and buy that widget today if you knew you could get it for the exact same price or maybe even cheaper 7 months from now?
Yeah.
Right? So you need for everybody's sort of psychology, for market psychology to work, you need the threat of inflation.
Well, I'm glad you explained that very well, and I'm glad to hear that. And I guess the good news is if you own any oil company stocks, their earnings are way up right now, right?
Glass half full. There you go.
That's a great point. Listen, Trish Regan, great to have you as part of this program, and we'll look forward to talking to you again soon.